Bitcoin's $1T route exposes fragile market structure, Deutsche Bank says. The Bitcoin price drop to $80,000 last week reflected a mix of macro pressure, fading regulatory momentum and thinning liquidity that has tested Bitcoin's maturity. Deutsche Bank, DB, said Bitcoin's BTC $880.69 slide to about $80,000 on November 21st, roughly 35% below its early October peak, shows how quickly macroeconomic pressures and fragile market structure can erase crypto gains, wiping out nearly $1 trillion in value before the token bounced back toward $87,000. The world's largest cryptocurrency was priced around $86,000 at publication time. The bank attributed the drop to a mix of risk-off sentiment, higher-for-longer interest rate expectations, fading regulatory momentum, weakening institutional flows, and profit-taking from long-term holders, arguing that these forces have tested Bitcoin's portfolio role and revived its Tinkerbell effect, where sentiment-driven belief underpins valuation. As equities fell on U.S. fiscal concerns, renewed U.S.-China tensions, and stretched AI valuations, Bitcoin moved more like a high-beta tech stock than a hedge, with correlations to major indexes jumping to stress-era levels, wrote analysts Marian Labour and Camilla Siazin in the Monday report. The analysts also highlighted hawkish Federal Reserve messaging, despite a rate cut, as a trigger that reinforced Bitcoin's negative sensitivity to shifting rate expectations. Regulatory progress has stalled, the bank noted, with delays to the Clarity Act eroding optimism over clearer market structure and deeper liquidity. Meanwhile, institutional flows have reversed sharply, with thinning order books amplifying sell-offs and spot exchange-traded fund, ETF, outflows feeding a negative liquidity cycle. Long-term holders have sold heavily as volatility spiked, adding to pressure. The report argued that Bitcoin's long-term maturation remains intact but cautioned that uncertainty, leverage, and policy ambiguity continue to magnify drawdowns, even as eventual regulatory clarity and broader institutional adoption could support future phases of the market. Read more. Citigroup warns of Bitcoin having season chill as prices sink. ETF outflows near $4 billion.